FHA loans are a great option for the first-time homebuyer looking to jump into homeownership. The FHA loan program enables those with less than perfect credit and or lower down payments to get in on the American dream of owning their own home. Here are some of the benefits that come with an FHA loan. Low down payment requirements, flexible underwriting guidelines, competitive interest rates, lower closing costs, streamlined refinance process, gift funds allowed from family members as part of a down payment. If you're considering purchasing your first home, an FHA loan could be just what you need to get started. With flexible guidelines and competitive interest rates, FHA loans can make the dream of homeownership achievable for many. Speak with a reputable mortgage lender today to learn more about the benefits of an FHA loan and get started on your path to homeownership. FHA loans have become a popular financing option for many individuals who are looking to purchase their first home. This program is backed by the Federal Housing Administration, FHA, which makes it possible for lenders to provide loans to borrowers who may not qualify for conventional mortgage options. In this section, we will discuss the requirements for FHA loans in more detail. To qualify for an FHA loan, borrowers must meet certain requirements. One of the most appealing aspects of FHA loans is that they require a lower down payment than most conventional loans. Borrowers can put down as little as 3.5% of the purchase price, as long as they have a credit score of at least 580. If a borrower has a credit score of 500 to 579, they may still be able to qualify for an FHA loan, but will need to put down at least 10% of the purchase price. In addition to the credit score requirement, borrowers must also demonstrate their ability to repay the loan. This is typically determined by looking at the borrower's debt-to-income DTI ratio. The DTI ratio is calculated by dividing the borrower's monthly debt payments by their gross monthly income. To qualify for an FHA loan, borrowers must have a DTI ratio of no more than 43%. Another requirement for FHA loans is that the property being purchased must meet certain standards. This is known as the FHA appraisal process. An appraiser will evaluate the property to ensure that it meets minimum property standards, MPS. These standards are in place to protect the borrower and ensure that the property is safe, sound, and structurally sound. In summary, FHA loans offer a great opportunity for first-time homebuyers to purchase a home with a lower down payment and flexible credit requirements. To qualify for an FHA loan, borrowers must have a credit score of at least 580, meet certain DTI requirements, and ensure that the property meets minimum property standards. If you are considering an FHA loan, speak with a reputable mortgage lender who can guide you through the process and help you determine if this is the right option for you. FHA loans are a type of mortgage loan backed by the Federal Housing Administration. The FHA loan process can be an attractive option for those who are looking to purchase their first home, as well as those who may have less than perfect credit or a low down payment. One of the biggest advantages of an FHA loan is the low down payment requirement. The minimum down payment for an FHA loan can be as low as 3.5%, making it easier for borrowers to achieve their dream of homeownership. In addition, this low down payment requirement allows borrowers to keep more money in their savings accounts, which can be used for other expenses related to buying a home, like home inspections and closing costs. Another benefit of an FHA loan is flexible underwriting guidelines. While traditional lenders may have strict underwriting requirements, the FHA allows for more flexibility, making it easier for borrowers to be approved for a loan. This can be especially helpful for those who have had past credit issues, as the FHA takes a more holistic approach to reviewing a borrower's credit history. FHA loans also typically come with competitive interest rates. These rates can vary based on a borrower's credit score and other factors, but in general, FHA interest rates are often lower than those offered by traditional lenders. This can save borrowers a significant amount of money over the life of their loan. Lower closing costs are another advantage of an FHA loan. They usually have lower closing costs compared to other mortgage loans. This can also help borrowers save money up front and make homeownership more affordable. Finally, an FHA loan can allow borrowers to streamline the refinance process. Under certain circumstances, borrowers may be able FHA loans have become a popular choice for many homebuyers due to their low down payment requirements, flexible credit standards, and competitive interest rates. However, to be eligible for an FHA loan, borrowers must meet certain requirements. One of the main requirements for an FHA loan is a minimum credit score of 580. If a borrower has a credit score between 500 and 579, they may still be eligible for an FHA loan, but will be required to put down a higher down payment of at least 10% of the purchase price. In addition to the credit score requirement, borrowers must also meet certain debt-to-income (DTI) ratio standards. The DTI ratio is a measure of a borrower's ability to repay their loan, and it is calculated by dividing their monthly debt payments by their gross monthly income. To qualify for an FHA loan, borrowers must have a DTI ratio of no more than 43%. Furthermore, FHA loans require the property being purchased to meet certain minimum property standards (MPS) set by the Federal Housing Administration. This is determined through an FHA appraisal process, where an appraiser evaluates the property to ensure that it is structurally sound and meets safety requirements. Another important requirement for FHA loans is that borrowers are required to purchase mortgage insurance. Mortgage insurance lowers the risk to the lender, which allows them to lend to borrowers with lower credit scores and smaller down payments. The mortgage insurance premium, MIP, is typically paid monthly and can be expensive over the life of the loan. However, MIP payments can be eliminated once the borrower has paid off 20% of the loan amount. In summary, FHA loans can be an attractive option for many homebuyers because of their low down payment requirements, flexible credit standards, and competitive interest rates. However, to be eligible for an FHA loan, borrowers must meet certain requirements, including a minimum credit score of 580, a maximum debt-to-income ratio of 43%, and purchasing mortgage insurance. It is important to work with a reputable mortgage lender who can guide you through the process and help determine if an FHA loan is the right option for you. To refinance their FHA loan without having to go through a full underwriting process again. This can save borrowers time and money, making it easier to refinance and take advantage of lower interest rates in the future. In conclusion, FHA loans are a powerful tool for borrowers who want to achieve their dream of homeownership. With low down payment requirements, flexible underwriting guidelines, competitive interest rates, and lower closing costs, FHA loans can help more people get into homes and on the path to building equity and financial stability.